Welcome back. Having your own income for the first time in your life is exciting. It's your money now and you get to decide how to spend it. The very first thing you have to learn is that there is a major difference between gross income and net income. Gross income is how much you earn before taxes and deductions. Net income is the amount that you take home from each paycheck that you receive. Great. Well, what if you work for yourself or you work in a job where taxes are not deducted from your pay? You might be in for a huge surprise on April 15th, and I know this from personal experience. Remember that April 15th is the date that you must file your individual income tax return with the federal government. If you haven't had enough money deducted from your paycheck to pay the tax due, you'll have to write a check to the IRS. If you don't have a job where taxes are automatically deducted, you're going to have to write a big check to the IRS. So what you have to do is make sure that you don't have an April surprise. When you fill out your W-4, and that's the IRS form that you fill out when you get a job, choose 0 dependents for withholding purposes. This assumes that you're single and you don't have any children to support. If that's not the case, then choose the actual number of dependents that you may have to support. By the way, no, you don't count as your own dependent. This should result in enough taxes being withheld from your check to make sure that you won't have to write a check to the IRS. Heck, you might even get a refund. If you work for yourself or work in a job where no taxes are withheld, you have to be very disciplined or you're going to find yourself in a heck of a tax fix. We suggest that you set aside 25% of your gross income for income tax and FICA. The amount should be enough to cover the check that you might have to write on April 15th. If the amount that you owe is less, then you set aside, we'll go out to dinner, but make sure that you save the rest. Thanks, guys.
I don't think that's a relationship. I suppose you could call it that, but
no,
but it's stretching it seems to me.
Right.
Let's talk a little bit about what are the benefits of a banking relationship by knowing somebody in the bank.
A depository relationship would be as what we described, where you just have a checking account, you might have a CD, a savings account, and there are less reasons or less need to have relationships with people for those kinds of products that we offer. If you're going to borrow money, or if you're thinking about borrowing money, if it's in your future in the next 5 years, it does behoove you to get to know someone who would be in a position of responsibility that might be making the decision or doing the paperwork that leads to your decision, so they can get to know your character, because character is one of the things that bankers look at when determining if you are creditworthy for your loan.
You mean it's not all based on just my credit score?
No. Credit score is very important.
Credit score does drive the...
Credit score may trump character, actually, but
in the end, yes.
Character is very important.
Yeah, well, it seems to me that a young person first deciding where they want to bank is a tough decision. But then actually walking in the door, opening an account, and getting to know someone in a bank is tough.
Right.
Can you kind of walk us through the initial process of what I can expect when I walk in the door of a large institution like yours?
Sure. If you're a young person under 18, you will need to come with your parent or guardian, because someone under 18 is unable to sign the contract for the account.
Okay.
So you'll need to come in with a parent or guardian, and just as soon as you come through the door, someone should greet you and say may I help you, or some banks you sign a list what you're there for, that
Sure.
kind of thing. So whatever their cue is to get you in the right place, you'll get to, most likely it's called a personal banker or the bank branch manager, and you'll say, I want to open an account. And they may ask what kind of account, because that's initially what we think about, okay, what kind of paperwork am I going to be doing, but you may not know. So you may say, I have a babysitting job and I'm beginning to accumulate more money than I want to keep in my piggy bank, and what should I do with it? So you would talk to the banker about what will you need to write checks? Will you need an ATM card? You know, what are you looking at for services from the bank? If you're just looking for safety for your deposits, well, then we certainly have that. But what kind of access? You want to be able to access your money occasionally, or in addition to watch it grow. But so the banker will talk to you about the options that bank offers and what might work for you.
Now, is there a difference between a bank and a credit union, the way they operate?
There is a difference. Banks are for-profit organizations, and credit unions are not-for-profit organizations. Credit unions also serve a member based. You're a member of a credit union, whereas you're a customer of a bank.
Right.
Or a shareholder would be our ownership group. So in the membership of a credit union, it may be geographically organized, like an Albuquerque area, or it may be an employer-based. There's different groups that you would be a member of or a resident of a location.
So I would have to be a member of a certain class of people to join that credit union?
Generally.
In other words, if it's an Albuquerque area and I lived in Roswell, I couldn't belong to that credit union.
Generally, although the rules have gotten much more liberal, and so you would want to ask about that, whether
Okay.
you would be eligible to join their credit union, and if you weren't eligible to join that one, you may be able to join a different one.
Let me go back to the opening the account
Yes.
question, because with the new Regulation E that's just gone into effect, and with the opt-in, opt-out, and we'll get to that, but
Okay.
it's my understanding that free checking may be a thing of the past. Do you anticipate that happening, one? And then two, if that is the case, would there be minimum deposits required in order to maintain a free checking account? What's your opinion on it? What do you think?
Yeah, I would say the general feeling is yes to both. Free checking is on the decline. Whether it will completely disappear, I don't know. There will be more requirements, most likely, to maintain free checking. The easiest may be a direct deposit. So if you have a job, then your employer automatically deposits your paycheck every 2 weeks, whatever it is, into your account, which is really a fantastic benefit. You don't have to go wait in a line, go to the ATM machine. However you deposit your check, it's already in there at a certain date.
Oh, I agree.
Yes.
I agree. I think that's fantastic.
So that may be, and the benefit that gives the banker is that we know you're employed and you have a, we'll call it a steady source of replenishing your account. You're not just taking money out, you're putting money in too.
Right.
So that might be a way that you access free checking. There may be restrictions on how many checks you write or number of debit card transactions that allow you to have free access. If you go beyond that, it may not be free anymore. So I think the rules are changing about that.
But you're really not sure what it's going to
No, it's evolving right
filter
now.
out to be. Yeah,
it's evolving because
that's
of the
certainly
change.
my understanding. Okay, so I walk into the bank, I'm going to open an account. What's the minimum amount of funds I have to put into the account in order to make that happen?
It's usually $25. It could be $50 some places. You would want to, a good idea is to do a little homework on it. Maybe call or go online, look to
Right.
see what the new account requirements. You'll need 2 forms of identification. Driver's license is an easy one, a school ID with a picture on it.
Birth certificate would work?
Birth certificate works.
Social security card work?
Yes.
Okay.
Yes.
Probably a credit card doesn't work.
I think a credit card can be a second
Really?
ID source.
Interesting.
Right.
Interesting.
Form of ID.
Okay, so I've got the account open.
Mm-hmm.
Do I have to order checks?
You do not have to order checks. You can be a ATM debit card only user.
Okay. So I assume then I have to order a debit card or an ATM?
It's a good question. I would say you don't have to do either one, but you're going to likely do one or the other.
Probably.
Because some people are check writers and don't want anything to do with ATM or technology in general. That's usually older generation, stereotypically,
Right.
not the young people that you're talking to. But our younger customers generally want very few checks and want ATM and debit card transactions.
Yeah, it makes sense to me. Most of the young people I talk to say, paper? Why would you want a
Right.
check? What would I want that for? I've got this debit card.
Yeah.
Which reminds me, you come back to the debit card thing, and up 3 or 4 months ago, it was possible to overdraw that debit account
Yes.
and put yourself behind the 8 ball, so to speak, with an awful lot of overdraft fees.
Yes.
Now today, those regulations have changed, have they not? And there's
Yes.
something called opt-in and opt-out. Can you
Right.
explain what that is?
Yes. By August 15th, our customers had to opt in order for us to give them overdraft protection. So if you were driving even to the bank to make your deposit and you realized that gas was low and there was the gas station that you normally went to, you pulled in, tried to swipe your debit card to pay for the gas, it would reject if you had not made an opt-in decision, even if you had not opted out. you had made no decision at all.
Right, okay.
It would reject the card because that transaction, let's say $20 worth of gas you planned to buy, was going to be more than you had in your account. So the transaction would reject and you would not be able to purchase the gas. Now, if you had opted in, the transaction would go through, and because you had told the bank that you would be responsible for overdraft charges if you spent more money than you had in your account, the $20 for this gas, saying
Right,
when you
right,
had $10 in your account.
Right.
But by opting in, you are accepting the service charge for that overdraft.
But at the same time, I'm also getting that service from the bank,
Exactly.
which kind of makes sense. How would you advise your own children, opt in or opt out?
I've advised my own children to opt in, but you need to also be responsible in knowing where your account balance is. So you need to be checking your balance. Writing it in a ledger might be considered the old-fashioned way. Checking it online would be the newest way to do it. But know where your balance is. So know whether you're putting yourself at risk for overdraft charges or not.
But even then, even the online thing or the 800 number thing, that balance might not be exactly accurate.
Oh, that's definitely true. Yes, you can have pending transactions that you've forgotten about and they haven't cleared yet, and then they clear at the worst, least convenient time for you.
I know.
Yeah,
It
yeah.
certainly happened to me.
Yes.
Well, speaking of online banking, would you advise young people to be online bankers or to do it the old-fashioned way?
Well, I do both, but I would advise to definitely use online services just to inquire about your balance, to see if a check is cleared. If you forgot to write down a check in your checkbook register, then you can go online and
Which
see.
happens to me all the
Yes,
time,
yes,
yeah.
it does. To all of us, you can see that item. You can usually see an electronic copy of the item. You can stop payment on a check. You can You can transfer money between accounts. You can do all kinds of things online.
Sounds pretty darn convenient to me.
It is. It is.
I have one last question before we wrap up, and I kind of want to preface it by a little story. When I was a young man, I was able to start building credit through my bank. And the way I did it was, I lived in Kansas City. I went down to North Kansas City, Missouri, and borrowed $500. And I left that money in the bank. I bought a certificate of deposit. As I recall, it was a 6-month CD. And 6 months later, I used that same $500 to pay back the CD plus interest. Seems to me it was $15. That built me a credit reputation. Is that still possible?
Yes, yes, you can certainly borrow against your own money, and rates are low to do that. And in that situation, you would borrow for 6 months. You would make 6 monthly payments. That would be better to do than make one payment at the end of 6 months.
Oh, really? Why is that?
Because it'd be better for people checking your credit to see the 6 monthly timely payments. And if you were really smart, you might not have been able to do this when you did it, but you would have it auto drafted from your account so that it always came out on the 18th of the month, something, so that they could see the consistency of your payment.
Yeah, auto draft, forget about that. When I made that loan,
Yeah,
the only
yeah.
auto thing was something that was drivable.
No,
Definitely.
you can do that now.
Well, that's very interesting. I think that probably young people should look at that option, perhaps rather than the credit card option. Wouldn't you agree?
Well, you can get in a lot more trouble with credit card debt than you can with the CD loan that you gave as an example.
Definitely,
So, yes.
definitely. Well, thank you so much for having us in your lovely office today.
You're welcome.
And granting us your time. This has been a very interesting interview. We do really appreciate it.
You're welcome. Glad to help out.
And we will be right back. Welcome back. You know, Em, that was quite an interview, didn't you think?
It was great. It was so interesting to listen in on that interview.
Tell me, what did you learn by listening to Miss Thomas?
Well, the first thing that I learned is that you need to know someone in the bank, and the reason being is that they can vouch for your character when you're ready to take out a loan.
Yeah, you're right. If you remember, she said that the loan process, even though it was ultimately based on your credit score, it still came down to somebody knowing you.
Right.
Otherwise, you have less of a chance to get that loan.
And when they know you, they can also help you determine what options and different accounts are best for you. So
True.
that's another helpful
True
thing.
indeed. What else did you learn?
Another thing that I learned was that when you're opening an account, make sure you find out what the different requirements are for the account. You may have to have a minimum balance. You may not be able to write checks. There's different things, so make sure that you know the requirements when opening
Yeah,
an account.
you're right, because she did mention that because of the new Regulation E, that things are changing, and they're really kind of in flux right now, aren't they? And then finally, what was your third point?
The last thing that I learned is that it's really my responsibility to know what my account balance is. I can't expect online banking or like text messages or any other thing to keep track of my most current account balance. It's really my responsibility.
Boy, I tell you what, and it does come down to personal responsibility ultimately.
Yes, it
Well,
does.
we'll be right back with our next segment.
Thanks, guys.